Welcome to Trading Lounge and the US indices for Friday, September 10, and starting with a Russell here. I can count 5 waves up to this point here. It's also the case that it's just the thing that bothers me about this. I just can't see how we can get 1, 2, 3, 4, 5 waves in time for before the SP and the NASDAQ top out. We could put this here and look at this as wave 1 and 2 here, and then 3 and 4 here, and then just go to here for this to have 5 waves here. So that would make a little bit more sense. The only markets, I mean, you can have a look at, because we're expecting Google and Facebook and all those guys to top out, and I'm thinking the 21st of September, which is the Equinox. So that's when, well, the Equinox is when the March run started to the upside. It's just the banks really. So this is BAC here, and I can see that, and you could see too that this is in 3 waves here, this move, so it's corrective. So that means we'll be making a high above here. Now we do have 5 waves in this move here first, so that means that we're in wave 2 here. We still need waves 3, 4 and 5, so that's going to take us, well, if this was this is a daily chart, so if this is wave 1 here, this is taking us much higher. So these particular stocks, in this sector, they're just going to be moving higher, but that doesn't seem the case for the other markets that we've been looking at. So a bit of a puzzle here that I need to sort of accommodate in my own brain cells. But so there is, it's possible for these smaller cap stocks, and also too, this particular pattern that we're looking at here. If we look at that in terms of, I have to use another charting program here. This is it doesn't really matter. It's just an end of day program. But this is the SP500 here. Okay, so it's kind of got the same daily chart, same pattern as the Russell. It's the SP500. So obviously this is the low here. We can count up here as 1 here, and then 2 here, and then 1 and 2 and 3 and 4 and 5 here for a 3rd wave, a 4th wave here, then 1 and 2 and 3 and 4 and 5 here. So we could look at this as wave 1 here and wave 2 here. Obviously this one here, if we look at that as 3 and 4 here, it's definitely got overlap here. But like I say, maybe we can get that in 3 waves there. So we're looking at a just one more move up here for this, but yeah, I mean, this is definitely corrective because it's got overlapping wave structures. So we should be making a high above here, and we're looking at the 21st of September. So for that there, this is just this is the SMH, the semiconductor market, but it's kind of also interesting as well because it's really struggling. We can look at this as the A wave. This is in 3 waves, so that's a B wave, and then 1, 2, 3, 4, 5 there for the C wave, overlapping here, but still at the end of the day it's the best fit. So wave 3 and 4 here, and then we've got to try to get wave 5 out of here. Now either it's got, obviously we can look at this as 1, 2, 3, 4, 5 here for 1, and A and a B and a C for 2 here. This looks like it's in 3 waves. Maybe we can get 5 waves out of it. Maybe, this is either ending or it's in a big building process, and it's got a long way to move to the upside. We know that there's a bottleneck in this particular sector with all of this, but this is either struggling to move up, which is kind of in line with this market here as well. I mean, this is a struggle here for this. I mean, sure, this could also be an A wave and a B wave and a C wave coming down here for a bigger market as well. So they're kind of fitting in with the Russell here in that case. So a little bit of a puzzle to work out. I mean, we do have 5 waves in this move here. This is the low here. We could look at it as wave 1 with an ABC for 2 here, and then 3 and 4 and 5, and just make a top above here, and then fold down from that point, ending on the around the 20th of September, when I think that stocks like Tesla, Facebook and Apple, those guys, you know, fading out at that point. But anyway, coming into the hourly chart here. Anyway, just pointing out that I've got a bit of a problem with it, you know. So from this low here, which we could look as wave 2, as I just mentioned, I've got it as an A and a B and a C at this point, but I can't confirm that because this move down through here is at this stage is still bullish. So I can put this here as the A wave, the B wave, and the C wave here. So because this has got 5 waves in it, so we can just pretty much go straight up from there and prove me wrong on that B wave without a problem, you know. But if we come down and make a new low here, that will give us 5 waves down, then we're going to get 3 waves up, and then we're going to get another 5 down. So we'll just see what happens here. It's all a little bit messy. I mean, if I was confident, well, then we could, you know, jump on board and go for it, but it's not here with this. And also to the other markets, when we're looking at these with the NASDAQ here and also the SP. Now, I've got counts that can take us higher, but I'm tying these counts in with stock. So I think it's a sensible thing to do. Is it the right thing to do? Yes and no. It's the right thing to do to be sort of cautious. Is it will the analysis be right? I don't know, but I think being at the top of the markets, we just need to be cautious, and I started to harp on about that yesterday, and I think we need to sort of be in, you know, put the cautious sort of hat, not to be sort of fearful, but, you know, to do all the right things at the right time. We know that markets won't top exactly the way we expect them to, so we need to be mindful of that. But I can certainly extend this wave 3 higher. That's not a problem, and we can do that on the S&P. We've been looking at that on the S&P. We won't be looking at that today because I'm just more focused on this being corrective here. So from this wave 4, looking at this as 1 and 2 and 3 and 4 here, and then just going up for wave 5 at that point. So I'll just go to the intraday here on the 4-hour chart. So this could be counted a little bit differently. It's also possible to put wave 1 here. Not that it makes a big deal. I'm not sort of focused on that. I'm just focused on this wave 4. I can see that this little move here is corrective. So we should, well, all I need is, I don't need to make a new low. I just need 5 waves in this move here. So I really need, but anyway, we'll go have a closer look. But in a nutshell, we're just looking for another 5 waves up through to here. That will take us into September the 21st, that Equinox period. So this is the other way to look at it here. So it doesn't kind of matter really at this particular point. We can see that wave 3 is shorter than wave 1. So that means that this move here needs to be shorter than wave 3 in this case. All we can do is look at this. I mean, this move from this low here, from here to here to here, is a 3-wave corrective move. So we can expect it to, this is the 38.2%, that horizontal line. We can expect that to come down a little bit further and take that low out there. So it doesn't need too long as it's got 5 waves there. And then we'll be just simply counting 5 waves to the upside here. That can take us a good 10 days, and that will take us into the 20th September. And September is known for bearish months. So this is what we also need to be careful of as well. So yeah, this is a conservative count that could have a possible top in play. That would be in line with stock, with Apple, those sorts of things. So, you know, there's these stocks that we're talking about, and Google, they're in the top 10. So yeah, it carries some sort of weight. As I mentioned, the banking sector can take us higher. So there is hope for the market to climb higher. I mean, obviously, while they're still printing money, we can, you know, edge higher. But it's kind of interesting when you look at the market is that we know that, yeah, it is edging higher, but it's sort of reluctantly going higher because everybody knows that it's like, well, everybody think that it's so overpriced, and will they stop printing money, and so there's a lot of sort of doubt and caution in the market, and we can see that by the way the market is creeping higher. So this particular count here, be it right or be it wrong, I mean, I can certainly see if it needs to be reworked. I can show you how it can be reworked in some different ways, and it probably needs to be reworked as well, because this makes this fifth wave here in the extension really quite long at this particular point in time. We can look at it in a different way, I suppose. I think I've got it here somewhere. We can look at it in quite a few different ways, but it's still, I still want to look at this towards the end here. That's the main point with this. So in this case we're just looking at this as 1 and 2 and 3, and this third wave here, this is shorter than wave 1 here, so we need to address that. Let's just go into the the count could certainly be right or wrong. Coming from this wave 4 low here, we're looking at this as wave 1 and 2 here, and there's a good case for 1, 2, 3, 4, 5 here for the third wave, and the fourth wave brings us back to the 38.2% here, and this we need to make a new low just below, one more little low here. We expect Thursday to be bearish and Friday to be bullish, so let's just, if we don't get Friday being bullish, then I know that we've got a change in trend, and that way we need to be very cautious at that point. So we could also look from this wave 2 here, we could look at it up as wave 1 and come back to the 61.8%, a bit lower here, but anything sort of past this point here, or that as resistance, then we'd have to consider that we've got a top in play at that point. So it's all very sort of edgy from this point onwards. If this comes to here as 38.2% and then starts to move up here in 5 waves, I'm looking for the 21st of September. I don't know what day that's on. I don't even know if it's on a weekend. I'm going to need to check. And also 2, we'd be looking at the 4600. Because wave 3 is shorter than wave 1, then from the 38.2% retracement level to the 46 makes this length of wave 5 here of 5, it makes this one here 61.8% the length of wave 3 here. So we'll stay with the 46 target. So let's just see how it sort of all plays out here. It's not, we have to realize that there's a beginning, a middle and an end to a trend. And we could be at the end of the trend, so we're just putting on the hat that makes us a little bit more cautious about what we're doing, Once we get past this, so if we go 1, 2, 3, 4 and 5 to here, and then we see a move that can be corrective, and we can go long again past that, well then we'll have a look at the next extension to the upside, which will probably be in line with the banks, and that I've got that. We'll have a quick look at it on this chart here. That actually takes us higher. We don't have to worry about this here, but this third wave here can take us higher. So I've also got this count here that can take us higher as well. So I'm still working that, but I just want to, because of where stocks are, I just need to be cautious of a few things at this point. So this wave 3 here, we did look at this in a slightly different way, but we had wave 1 and 2 here, and we had wave 3 here, and we're putting wave 4 in here, but at the same time I had blue wave 1 here and blue wave 2, so that's where that would play out as. So that wave 3 would be up there, and we'd look at this as 1 and 2 and 3 and 4 and 5 for the third wave, then the fourth wave, and so on at that point. So that count is still there, and that would probably be more in line with the bank. So it's not over. We're just getting to a point where we need to just be a little bit mindful, that's all, about what we do and what you've got in the market at that point. So so this is where we were yesterday on the hourly chart. So I'm going to put this over to here, and we've still looked for these 5 waves up, but up to the 4600 here. So let's just talk about this for a moment. So we can come down to this space, to the 38.2%. So if that's the case, the long trade here would be coming back up here and using a classic trading levels pattern to gain support onto the minor level 5 here for that. So that's the way that you can move in long, and of course you can do the same thing on these other levels. Well, that is 45, so we've got 1, 2 and 3 here. If we get support on top of 3 with the classic trading levels pattern, which is 45.30, if we get tested support here, then you know that we're leaving this number and we can look at this number up here for that. So getting support on top of subgroup 1 here, that would separate the pool of the 500, and that will take us to the 50 there. And if we're going to the 50, well, then we're going higher at that point. So yeah, I always prefer the market when I'm working with a large number. I prefer the market to come down below the level, and you know, if it finds demand, well, then it's going to be pushed back up on the level, and that just gives you a safer setup at that point. So if that's triggered, and that's where the stop can go at that point, so it's all nice and tight at that stage. So let's just see how it goes. So just to recap a little bit, is that in the bullish cycle we expect Thursday to be the bearish day, so we're getting that. So on Friday we want it to be bullish. If we don't see it as being bullish, then we know that we've got a change in trend. It's that simple. If it is bullish on the Friday, then we can expect Monday to follow through on that, and then Tuesday profit taking, and then Wednesday and Thursdays we get the swing markets, swing days in the market. Okay, so use the bullish weekly cycle, use the levels, and this is the Elliott count here. And as I mentioned before, just coming back to the 4-hour chart, just the other little note that we need to look at here. Our bigger count, longer term count, is wave 1 here with wave 2 here, then wave 1 and wave 2. So in that instance, we'll be pulling back a little bit lower in that regard. But that would also leave Friday bullish at that point, which is not good timing for those events. But we wouldn't really turn bearish until this 61.8% here became the resistance, okay? So that would be helpful to know that at that point. So I'll just tidy these up. We don't need that. I will keep that and put that there. So that's it. Let's see what comes out of the gates. Alrighty, enjoy the weekend. Cheers.